Hello investors, welcome to Simpli Stocks. So far on our channel, we have discussed 8 small cap businesses that have delivered very strong results in Q3 FY26 quarter, that is the December quarter. Continuing with our series, today we will talk about 4 more businesses. What's interesting is that out of these 4, we are covering 3 businesses for the first time in our result series. So you can have new stocks for your watch list from this video. But before I get to the stocks, these days I often hear one question from many investors. What is the point of tracking so many results when almost all businesses are going through such heavy corrections? So see, you need to focus on the process. Whether it takes 3 months or 6 months, that doesn't matter. That's why investing is not as easy as it looks or sounds. You have to do your work properly, you follow the right process, and you have to maintain faith. You need to stay emotionally balanced. You need to keep hope that whenever the market will recover, high quality businesses will perform the best. So you need to keep that faith. With that, let's get started. So the first business we will study today is Aurum Proptech. This is a very unique business. Aurum mainly has 5 products, and these 5 are spread across into 2 segments, rental and distribution. In the rental segment, the company operates 270 hostels or PGs across the country under the Hello World brand, where they manage almost 19,500 beds or seats. Apart from PGs, if you want to rent a flat or an apartment, they also run the Nestaway platform where you can go and look for a flat. Here, they provide many services as well, ranging from property listing to rent collection, agreements and more. Then they have 3 platforms, Aurum Analytica, Sell.do and PropTiger for real estate developers and companies. Aurum Analytica and Sell.do help real estate companies with lead generation, CRM, transaction management and more. As for PropTiger, it is a listing platform similar to 99 Acres and Magic Bricks. Now to put it in very simple words, these 3 products are for real estate developers so that they can easily sell their flats or properties. This is Aurum's distribution segment. In Q3, both rental and distribution segments contributed roughly 55 to 60 crore rupees each to revenue. Overall sales grew by 77% year on year. Q3 was also a very critical quarter because the company also turned profitable at the PAT level or net profit level. You will see EBITDA margin improved from -2% last year to 6%. PBT margin improved from -14% to 2%. And although it is not mentioned here, Aurum also earned a net profit of approx 3 CR this quarter. Now this 3 CR PAT may look small to you, but you need to understand the strength of the business and the direction in which it is going. Aurum has put together a complete tech ecosystem for real estate, offering end-to-end services from renting PGs and flats to buying homes on the demand side, and also helping developers in getting sales on supply side. So all these products are highly integrated and there is a strong cross-selling potential as well. Cross-selling means, for example, when you visit a bank branch for some work and there the bank staff you will see tries to sell you a personal loan or insurance. So that is cross-selling. Additionally, PropTech is an emerging fast-growing segment in India worth almost 40,000 crore rupees. Aurum Analytica and Sell.do, both these platforms rank among the top 3 platforms with respect to real estate in our country. And because this is a tech company, as I have repeatedly mentioned while discussing BlackBuck or any other tech business, that once sales increase, as your costs or development costs will remain largely the same, the margin expansion can happen very quickly, leading to strong growth in bottom line. So you can study Aurum for yourself once. The rental business may grow at a relatively modest rate, but the distribution segment is the main trigger where strong top line as well as bottom line growth can come. The company is currently operating at an annual run rate of say 500 CR and it aims to reach 1,000 crore revenue in the next 3 years with at least 8 to 10% net profit margins. At that level, the 3-year forward PE for Aurum comes around 14 to 18. So you can look into it once. Now, just before moving forward, if you are liking this video so far, do give me a thumbs up. Also, you can subscribe to our channel Simpli Stocks, where we bring multiple such videos every week. Honestly, you see, your likes and subscribes are our only motivation so that we keep bringing such high quality research to you for free. So do like this video, and yes, also subscribe to our channel. Now, coming back to our discussion, the next business we will study is Poonawala Fincorp. Poonawala is an NBFC that provides different types of unsecured and secured loans. Currently, their largest segment is loan against property, contributing around 27.5% of their AUM. After that, instant consumer loans and mid-market loans are other major segments. Instant consumer loans fall in the category of microfinance, and these are high margin but high risk loans without collateral, where NBFCs charge up to 25 to 30% interest. In the mid-market segment, Poonawala provides working capital loans to other NBFCs and companies. Now, please listen to me and understand this carefully, otherwise Poonawala will go over your head. Last year, the microfinance sector went through a down cycle due to overlending. Like, single customer had loans running from four different places, and then suddenly NPAs increased and banks and NBFCs had to take heavy losses. You can see this here too, that in Q3 last year, credit costs were very high and profits were extremely low. ROA dropped to 0.3%. In Q3 FY25, at least there was 19 CR profit, but in Q2, although it is not written here, but the company even reported a massive loss of 470 crore rupees. So because of this, Poonawala's PE or PV ratios may look high to you since profits were weak for the last 1 to 1.5 years. I am telling you this because many investors just look at multiples and say it is overvalued. But you need to understand the direction of the business in which it is going. Since then, the company's management has also changed. The old management was also a bit weak on reporting, I will say. And from here, the company is focusing on growing its AUM at a fast rate again. You will see that their AUM, or say total loans given, has grown by 78% compared to the last year. And there has been good 15% growth on quarter basis as well. In this direction, improvement has been seen in all metrics from net interest income to pre-provision operating profit. Also, it is not written here, but their disbursements means new loans have also grown by 84% year on year. Now, from here on, their target is to grow their AUM at a rate of 35 to 40%, which will result in very good growth at the PAT level. For these growth plans, they have also recently raised 1500 crore rupees, and they have a plan to raise about 5500 crore more in the future. Poonawala's AUM is approximately at 55,000 crore rupees right now. So you can study this independently once. Microfinance is a high margin, high growth segment. So the opportunity here is good. But you should also know how to play this cycle, because in microfinance, the cycle, when it upturns, it also upturns very fast. Because see, as loans are unsecured without collateral, so the risk is also very high. So you must know how to play this cycle and how to plan your exit strategy here. After Poonawala, let us look at SML Mahindra. SML is in the commercial vehicle segment, and they make medium and light commercial trucks and buses. Their main target customers are government departments, schools, and transporters. For example, you might have seen their school buses or police buses. Last year, Mahindra acquired SML from its Japanese parent, and after which they also changed the name from SML Isuzu to SML Mahindra. SML is purely cyclical bet, and commercial vehicle segment has revived now in India after a very long time. You will see right now companies from Ashok Leyland to Force Motors all are reporting very strong numbers. SML's sales volumes itself grew by 62%, 63% year on year, and in the same direction, in the October to December months, that is Q3, revenue increased by 63%, reaching almost 540 crore rupees. December is usually a weak quarter for SML as the school season starts in April. So their sales typically increase from January. But this time, very good numbers have come in Q3 as well. So on a low base, the profit growth has been very strong because of operating leverage. Profit before tax has jumped straight from 1 crore rupees to 24 crore. The same performance has continued for the month of January too. in the January month, the company sold about 1340 units approx, which is a 30% growth compared to the last year. But there is also the effect of last year's low base, which is why the growth looks slightly higher, I will say. Therefore, you have to track their February and March monthly sales data very closely if you are interested in this business, because you must know that in the entire sector, the entire auto sector, investors don't wait much for the results to come. Companies keep releasing their monthly sales data at the end of every month, based on which you have to make your decisions as well. Now, lastly, the fourth and final business we will study today is Ather Energy. I also did a comparative analysis between Ather and Ola some time ago on our channel, where I explained how Ather has steadily gained market share from Ola over the past year. They have been continuously opening new experience centers or showrooms and improving their profit margins. So I won't go into much depth again. I will put the link to that video in the description and you can watch it from there. Now, Ather has received very good response for its wide body EV scooter Rizta. Its sales have increased rapidly. In the last 6 months, the company sold 5 lakh vehicles or units, out of which 2 lakh have been Rizta models only. Now, Ather's overall market share has reached about 18.4%. The company has its strongest hold in South India, but now they are also rapidly gaining market share in Central and North India. Now, coming to their Q3 results, in the December quarter, the company sold 50% more units than last year. In this direction, sales increased by 53% and a good improvement was also seen in the gross margin as well. This margin improvement is the biggest trigger for Ather. They already have top quality product and sales are growing very fast. The company is moving from losses towards profitability. 2 years ago, they were in loss even at the gross level, but now EBITDA loss is only about -3%. At this rate, Ather will soon become profitable at net level too. So you have to understand the scope of the business, the product moat Ather has, and also the direction in which their business is going. Because don't just remain fixated that company is still in losses. By the time it will report profit at PAT level, the story will be over from the point of view of investors here. Moving forward, their software attach rate is also very good, meaning about 91% of their customers also buy their software Ather Stack Pro along with the scooter. This will bring consistent non-cyclical revenue in the long term, which we also call annual recurring revenue. So their software is very, very popular among their customers. And currently 14% of Ather's business is non-vehicle, in which 10 to 11% share is from this software add-on and the remaining 2 to 3% is from service spares. This is also a very strong point because as auto models will get older, sales from service and spare parts will also increase. Right now, see, Ather is relatively new, but already like other legacy auto companies, 14 to 15% of their sales are coming from here. So there is a lot of potential in Ather. If you think from a long-term point of view about this business, say 2 or 3 year perspective, you will see a lot of value in this company. Therefore, you can study this independently as well. Now, you tell us in the comments which businesses I should cover in the next video of our Q3 FY26 result series. Also, if you loved this video, do like it, and yes, also subscribe to our channel, Simpli Stocks. If you support us with your likes and subscribes, we will be able to bring more such videos for you every week. So I will see you in the next video. Happy investing.